For centuries, human civilization has searched for ways to turn ideas into wealth. From the spice routes of the 1600s to the skyscrapers of Wall Street, one invisible system has shaped the rise and fall of empires, and the dreams of millions. That system is the stock market. It's not just a place where numbers dance on a screen. It's a living organism, a global network of capital, risk, trust, and ambition, where companies are born, fortunes are built, and futures are rewritten every second. Yet, despite its power, most people don't truly understand how it works. They see the headlines, they hear the noise. But they don't see the hidden machinery beneath the surface, the system that connects investors and innovators, savers and entrepreneurs, governments and global markets. In this documentary, we'll strip away the myths and break down the system piece by piece. You'll discover how a company goes from an idea to a publicly traded entity. How billions of dollars move silently through exchanges around the world. And how understanding this system, truly understanding it, can change the way you see money, opportunity, and your own financial future. This is not just about stocks. This is about power, psychology, and the invisible forces that shape the modern world. Welcome to the heart of the global economy. Welcome to the stock market. The origins of the stock market. To understand how the stock market truly works, we must travel back in time, long before skyscrapers, algorithms, and flashing trading screens. Our story begins over 400 years ago, in the bustling ports of 17th century Europe. Trade was exploding. Merchants were sailing across oceans, bringing back spices, silk, gold, and rare goods from distant lands. But with great opportunity came great risk. Many voyages never returned, lost to storms, pirates, or misfortune. Back then, one failed expedition could bankrupt an entire family. Wealthy merchants needed a way to share both the risks and the rewards of their voyages. And that's how one of the most powerful financial inventions in human history was born, the joint stock company. Instead of one person funding a dangerous trade journey, dozens of investors could each buy a small share. If the voyage succeeded, profits were divided. If it failed, losses were shared, and no one was completely ruined. In 1602, this idea was formalized in Amsterdam when the Dutch East India Company became the first company in the world to issue shares to the public. For the first time in history, ordinary people, not just nobles or royals, could own a piece of a global enterprise. But ownership created a new problem. How do you trade your shares once you own them? Merchants needed a place to meet, negotiate, and exchange their stakes. That place became known as the stock exchange. In the coffee houses and market squares of Amsterdam, London, and Paris, people gathered to buy and sell pieces of businesses, not goods, but ownership itself. This was revolutionary. It meant wealth was no longer tied only to land, gold, or kings. It could now be built from ideas, innovation, and human ambition. Over time, the idea spread like wildfire. The London Stock Exchange was established in 1801. New York followed in 1792, when 24 brokers signed the Buttonwood Agreement under a tree on Wall Street. What began as a way to fund trade voyages had transformed into the beating heart of capitalism, a place where businesses raise money to grow, and investors seek to grow their wealth. But behind this simple idea lies a profound truth. The stock market was never just about buying and selling. It was about trust. Investors had to believe that companies were real, that their ships were sailing, that profits would return. And companies had to believe that investors would keep their promises. That invisible thread of trust, woven through risk, reward, and ambition, became the foundation on which the modern financial world is built. And even today, more than 4 centuries later, every trade, every IPO, and every market movement still rests on that same principle. Trust is the heartbeat of the stock market. How the modern stock market works. Now that we understand how the stock market was born, let's look at how it truly operates today, the living system behind the numbers. Imagine the stock market as a vast global marketplace. But instead of buying fruits, gold, or real estate, people here buy and sell ownership in companies, represented by shares. Each share is a small piece of a business, and its value constantly changes based on one simple force: supply and demand. If more people want to buy a stock than sell it, its price rises. If more want to sell than buy, its price falls. Behind every price movement you see on a screen, there's a story: optimism or fear, confidence or doubt, all expressed through the flow of money. But how does this flow actually work? Let's break it down. The journey begins with you, the investor. To participate, you open an account with a broker, a licensed intermediary that connects you to the stock market. In the past, brokers were people shouting orders on a trading floor. Today, they're powerful digital platforms that execute trades in milliseconds. When you place an order, for example, to buy 10 shares of a company, that order doesn't go directly to another investor. It first enters the market infrastructure, a complex system of exchanges, order books, and matching engines. At the heart of this system is the stock exchange, platforms like the New York Stock Exchange, NASDAQ, London Stock Exchange, or Bombay Stock Exchange. These are the marketplaces where buyers and sellers meet. Every time someone places a buy order, it's added to the order book, a real-time ledger showing how many shares people want to buy and at what price. On the other side, sell orders list how many shares people want to sell and at what price. The exchange's matching engine continuously pairs these orders together, buyer and seller, executing trades in microseconds. But it's not just individuals trading. The market is a complex ecosystem made up of many participants: retail investors, everyday people investing their savings; institutional investors, pension funds, mutual funds, hedge funds managing billions; market makers, specialized firms that constantly buy and sell to provide liquidity; high-frequency traders, algorithms that trade thousands of times per second to capture micro-opportunities. Each of these players has different goals, strategies, and risk appetites, and together they create the heartbeat of the market. But what determines the price of a share? In the short term, it's supply and demand. But in the long term, company fundamentals, like revenue, profits, innovation, and growth potential, shape a company's real value. Markets are often emotional in the short run but logical in the long run. Price movements are also influenced by news and events, earnings reports, government policies, interest rate changes, geopolitical tensions. Even a single sentence from a central banker can shift billions of dollars within seconds. Another key concept is liquidity, the ease with which you can buy or sell a stock without significantly affecting its price. Stocks with high trading volume are highly liquid, while smaller companies with few trades are less liquid and more volatile. Then there's volatility, the degree to which a stock's price fluctuates. High volatility means larger swings and higher risk. Low volatility means more stable but often slower growth. Together, these elements, supply and demand, fundamentals, news, liquidity, and volatility, form the dynamic forces that make the stock market what it is: a living, breathing organism responding to billions of decisions every single day. And remember this: when you buy a stock, you're not just clicking a button or making a trade. You're partnering with a business. You're investing in its future, its people, its vision, and its potential to shape the world. This is the modern stock market, a complex system of technology, psychology, economics, and trust, all woven into one of the most powerful creations in human history. Investor psychology and market behavior. If the stock market is a machine built on numbers and technology, then psychology is the invisible fuel that keeps it running. Every price movement, every market boom, and every crash, all of it, is ultimately driven by one thing: human behavior. At its core, the market is not just a collection of companies and data points. It's a mirror reflecting our deepest emotions, our hopes, fears, greed, and instincts. And to truly understand how markets move, you must understand how people think. The most powerful force in the market is not a trading algorithm or a corporate earnings report. It's fear and greed, the two emotions that have driven investors for centuries. When optimism rises and greed takes over, investors rush to buy, pushing prices higher and higher, often beyond a company's real value. But when fear spreads, whether from bad news, economic shocks, or simple panic, the same investors rush to sell, sometimes abandoning great companies at rock-bottom prices. History is filled with examples. In the late 1990s, greed fueled the dot-com bubble. Investors believed the internet would change everything, and it did, but they paid astronomical prices for companies with no profits, sometimes no revenue at all. When reality set in, the bubble burst, and trillions of dollars vanished almost overnight. In 2008, fear reached its peak during the global financial crisis. Panic selling swept through markets as banks collapsed and economies teetered on the edge. Yet those who stayed calm, or even invested amid the chaos, saw enormous gains in the recovery that followed. More recently, we saw a new form of psychology unfold with the GameStop saga in 2021. A wave of retail investors, united by online communities, challenged powerful hedge funds, driven not by fundamentals but by collective emotion and social momentum. It was a striking reminder that markets are not always rational. These events reveal a deeper truth: the stock market is not a calculator, it's a crowd. And crowds follow patterns. They overreact, chase trends, and swing from euphoria to despair. Behavioral finance, the science of how psychology shapes financial decisions, helps us understand these patterns. And it reveals that humans are wired with cognitive biases that often lead to poor investment choices. Herd behavior: we follow the crowd because it feels safe, even when the crowd is wrong. Loss aversion: we fear losses more than we value gains, leading us to sell too early or hold on too long. Confirmation bias: we seek information that supports our beliefs and ignore data that challenges them. Overconfidence: we overestimate our knowledge and underestimate risk, often leading to costly mistakes. These biases aren't signs of weakness, they're part of human nature. But the greatest investors learn to recognize them and control them. Legendary investor Warren Buffett once said, "Be fearful when others are greedy, and greedy when others are fearful." That's not just a clever quote, it's a psychological principle. It means acting rationally when the crowd is emotional, and staying disciplined when markets are chaotic. Because in the end, successful investing is less about predicting the next move and more about mastering your own mind. The market doesn't punish ignorance, it punishes emotion. And those who learn to stay calm amid fear, patient amid greed, and rational amid chaos will always find opportunities others cannot see. Psychology moves markets. But self-awareness builds wealth. How investors build wealth. Knowledge alone doesn't build wealth. The true power of the stock market is unlocked only when knowledge meets patience, discipline, and strategy. Every legendary investor, from Warren Buffett to Peter Lynch, has followed one timeless principle: the market rewards time, not timing. Most people believe wealth is built by predicting the next hot stock or getting in and out at the perfect moment. But the truth is, trying to time the market is like trying to catch lightning in a bottle. Even the smartest investors in the world rarely do it successfully. Real wealth comes from owning great businesses, giving them time to grow, and letting the power of compounding do the heavy lifting. Compounding is the single most powerful force in investing. Albert Einstein called it the eighth wonder of the world. It means your money earns returns, and then those returns earn returns, and over time the growth becomes exponential. Here's a simple example: If you invest $10,000 and earn 10% per year, in 10 years you'll have around $26,000. But if you leave it for 30 years, you'll have over $174,000, without investing another rupee. The difference is not luck. It's time. And time is the most valuable asset any investor can have. But compounding only works if you stay invested. The biggest mistake most investors make is letting emotion interrupt the process, selling too early, panicking during crashes, or chasing quick profits. Legendary investor Peter Lynch once said, "Far more money has been lost by investors preparing for corrections than in the corrections themselves." The message is clear: focus on time in the market, not timing the market. Building wealth also means building the right strategy. And while there's no single formula, successful investors often follow a few key steps. Start with your goals. Are you investing for retirement, financial freedom, or generational wealth? Your goal shapes your risk level and time horizon. Diversify your portfolio. Don't put all your money into one stock or one sector. Spread your investments across industries, asset classes, and regions. Diversification reduces risk and smooths returns. Focus on quality. Own businesses with strong fundamentals, sustainable growth, and competitive advantages. Great companies compound wealth over decades. Invest consistently. Instead of trying to pick the perfect moment, invest regularly. Strategies like dollar-cost averaging remove emotion from the process and let you benefit from long-term market growth. Think long-term. Short-term volatility is inevitable. But over decades, markets tend to rise, driven by innovation, productivity, and human progress. Modern investors also have powerful tools previous generations never had. Index funds and ETFs allow you to own hundreds of companies at once with low fees and minimal effort, a simple, effective path to steady wealth. Dividend stocks provide income, while growth stocks offer higher potential returns. Combining them creates a balanced and resilient portfolio. And remember, wealth isn't just built by buying. It's built by holding. Warren Buffett famously said, "Our favorite holding period is forever." He and his partner Charlie Munger became billionaires not by trading daily, but by owning great companies for decades. Finally, wealth building is as much about mindset as it is about money. The greatest investors don't react, they plan. They don't chase trends, they follow principles. They don't try to get rich quickly, they build wealth steadily. Because in the stock market, patience is profit. And discipline is destiny. Master those two virtues, and you don't just invest in stocks, you invest in your future. The stock market and your future. For centuries, the stock market has been more than a place to trade shares. It has been a bridge between ideas and impact, dreams and reality, risk and reward. It has funded the ships that sailed across oceans. It has financed the factories that sparked the Industrial Revolution. It has powered the innovations that built the digital age. And it continues to shape the world we live in, silently, but powerfully, every single day. But here's the truth most people never realize: the stock market isn't just for billionaires, bankers, or hedge funds. It's for you. Every great company you admire, from the phone in your pocket to the car you drive, once started as an idea. And ordinary investors, people like you and me, gave those ideas the capital they needed to grow. In return, those investors shared in the success they helped create. That's the real purpose of the stock market: not gambling, not speculation, but participation, the chance to be part of humanity's progress. And in the decades ahead, that progress will accelerate like never before. Artificial intelligence, biotechnology, renewable energy, space exploration, these are not just headlines. They are the next frontiers of human civilization. And behind every breakthrough, every innovation, and every transformation will be a market, connecting capital to creation. The question is, Will you simply watch that future unfold, or will you own a piece of it? Remember this: you don't need to be rich to start. You don't need to be an expert. All you need is patience, discipline, and the courage to take the first step. Because every great investor, from Warren Buffett to the beginner buying their first share, started in the same place, with a decision. A decision to stop being a spectator and become a participant. A decision to stop fearing the market and start understanding it. A decision to stop dreaming about wealth and start building it. The stock market is not just about money. It's about time, turning the time you have today into the freedom you want tomorrow. And it's about legacy, planting seeds that will grow into opportunities not just for you, but for generations to come. So when you think of the stock market, don't think of charts and numbers. Think of possibility. Think of ownership. Think of the future. Because in the end, the market is not a game you watch. It's a story you can help write. And that story, your story, starts today. This is not the end of the story, it's just the beginning. If this documentary helped you see the stock market in a new light, remember, knowledge is only powerful when you use it. At Trillies, we believe financial education is more than just numbers, it's the foundation of freedom, purpose, and possibility. And every week, we're here to guide you deeper into markets, business, wealth, and the mindset that builds empires. So if you're ready to build a smarter future, don't stop here. Subscribe to Trillies right now, and join a global community of thinkers, dreamers, and builders. Turn on the notifications, so you never miss the next documentary that could change the way you see money and life. And share this video with someone who's ready to grow, because knowledge multiplies when we share it. This is your moment. This is your future. And this is Trillies, where stories become strategies, and dreams turn into destiny.